Dr. Brendan Rinn, welcome. Now, a recovery budget, very much.
Oh, absolutely. I think that what we can see is that the budget's still couched on the basis that we're in the middle of a global pandemic and that the crisis is continuing. The government's really trying to make sure that businesses look to invest because that is a weakness within the economy.
So you were surprised by the tax relief for small and medium business, weren't you?
Oh, absolutely. It costs $20 billion for that one extra year of the instant asset write-off. You know, just as they're anticipating that the deficit was starting to trend down, really, you can see in the forward estimates that it starts blowing out again. But ultimately, you know, not only are we looking to spend money to try to stimulate the economy, the government is starting to spend money to try to fix some of those areas in social need within the economy as well.
Now that is a multi-billion-dollar exercise
Absolutely.
with aged care, and
Yes.
obviously NDIS continues,
Yes.
and, mental health and childcare. We have seen a huge improvement though in the deficit since the October budget.
Yes.
That's a kind of one-off though. We've got to continue to fund these going forward, haven't we? How are we going to do that?
We do, and in fact it's not just a spending program for the forward estimates the next few years, it's going to be well after that as well. Simply the best way to fund that is to grow the economy. We need to grow the economy, get more people working, increase income tax paid by our workers, getting more in company income tax profit as well. So ultimately we're looking to grow the economy faster and deeper than
And how are we going to get business investment, especially with international borders closed until mid next year at the earliest, we say?
I think the instant asset write-off goes a long way to help that as well. Ultimately, businesses invest because they know that they're going to get a return on that investment. And so strengthening the economy, strengthening markets is really what we need to see happening so that businesses have that confidence to invest. It's one thing to say that you've got business confidence because the conditions are well. It's another thing to see the businesses put their hand in their pocket and actually make that investment.
Well, let's hope we see that happen. Dr. Brendan Rinn, thank you very much for joining us.
Thanks very much, Tiki.
Gail Dickerson, now your speciality obviously is in restructuring. This budget is a recovery budget. What do you make of some of the initiatives that are still there?
I think it's very targeted to supporting those industries that will continue to need support until international borders open up. So tourism, particularly in regional areas, and aviation, and some hospitality. So it's good to see those industries continuing to get the support. There are some industries that would have maybe expected a little bit more in terms of that support if you think about higher education, perhaps, and then some other industries that sit outside completely, like wine, which has domestic sales of liquor have performed very strongly through COVID as we've all been at home, but given the tariff situation with China, they're obviously facing challenges.
And the treatment of losses for businesses continues.
I think that is very well received, and I think that reflects that it is a recovery budget and companies need some continued support as they transition and wean off some of the stimulus that's out there. So I think that is positive. I think that was a bit of a surprise in terms of that being in there, and obviously there is a cost to that, but I think again it's part of supporting that recovery as we transition out of the pandemic.
Now, the big question around the place, obviously, is when does big business really start investing, and how much in the budget is there to help that happen? I suppose that question's still out there, but you yourself are seeing a huge amount of M&A enthusiasm, aren't you? Now, what's driving that?
Yeah. I mean, it is a very buoyant market, and you know, we only reflect 12 months ago, and it was the polar opposite. So where we expected to see lots of restructuring and solvency, in fact, what we've seen is a lot of M&A activity, a lot of transactions, a lot of people interested in acquiring and bolting on to the business, particularly around those where there's skills or there's digital assets that they want to acquire. And before we came into this recession, there's significant amounts of dry powder out there in terms of private equity. There's a lot of capital, there's a lot of liquidity looking for a home, as well as significant household savings. So it has brought about a circumstance where it's really driving some of that M&A activity and strong interest in terms of acquisitions and confidence.
busy year for some of you chaps. Thank you very much, Gail Dixon.
Okay, thank you.
Warwick Smith, how does this budget for you sit economically and politically?
Well, firstly, economically, it's a responsible budget for the very, very difficult and odd and unusual circumstances we find ourselves in as a country and as globally. There's a great deal of uncertainty. There's a great deal of uncertainty globally. There are pressures on us that we've never seen before. The spend is all about giving a social dividend to people that
Big
need it.
spend.
It's a very, very big spend. Proportionate, it's the largest we've ever seen, probably, certainly since the Great Depression. Probably we've spent more than we did cumulatively to fight the Second World War. We only just paid back the debt from the Second World War, I think, last year. So there's a long debt curl that needs to unfold over a long period of time.
But no talk of budget repair.
Not yet, but I don't say that that won't come, because it has to come, but it's about setting us up for growth, and that was the responsible thing to do. Politically, Tiki, I think that it gives them some quite good options. The unexpected revenue flows from corporate taxation have been massive, and they're converting that in the short term, but it does give them some political windows. May not be another budget. There may not be another budget.
When do you see the next election?
I'm predicting potentially in March. I don't think this year, but I think potentially
So that's
March.
really interesting, and they've surprisingly kept the assumption on that iron ore price at 55 US a ton, compared to what it is today at 230. That should give them a lot to play with.
It should give them a lot to play with. I think that was prudent to do that. That price is
Clever.
artificially high because of other suppliers not being able to meet demand out of China. So we have a window of high level revenues, which a smart government will use wisely where it is needed, and that gives them political options. And as I read somewhere this morning, if they can't win the next election after this, there'll need to be a royal commission into why they failed.
So, last question around really the international borders, that assumption that won't open until mid next year, and the importance of, I suppose, trade, skills, that sort of thing.
Well, look, we have skills pressure now because we've had no immigration. And we really there's a domestic take-up of jobs, but it's nearly reached its point where we can't satisfy demand, particularly to mid-level skills and lower skills and some really, really high-level skills. So we're starting to get economic crimping for our growth curve because we don't have those borders open. So sooner the better. Needs to be a little bit more haste, a little bit more imagination, how we can have entry into Australia from particular safe areas. It needs to be accelerated because you can't play to the growth narrative without providing us with the core elements, that is schools and continual access to schools. We're bringing Tongans in at the moment from a safe area to Western Australia to do work. We need to have many other such arrangements put in place.
Honourable Warwick Smith, great to talk. Thank you. Ming Long, great to have you here. A budget for the times, do you think?
Absolutely. I think it's certainly got us off on the right foot. It'll be important to see the detail and the execution of the policies that were announced yesterday.
Huge amount of spending, not a lot of reform.
No, that's not. But they're spending it in the right areas that have really been underinvested for a long time. But we do need to see that structural reform, especially tax reform, to ensure that we can actually get that budget into a more sustainable footing in the long term.
Were you surprised at any of the big spends, including the middle income tax offset? We also had obviously the huge social dividend spending, didn't we?
Yeah, so I think the social infrastructure side is absolutely to be expected, because this is exactly what the country needs at the moment. But I was surprised at some of that sort of low to middle income sort of offset. So I wasn't expecting that to sort of come in. And the tax relief, I wasn't expecting that to come through. That was actually a good surprise. But I do wonder, the sustainability of the budget in the long term.
What's missing in this budget?
Oh, climate. Where was climate in the budget? I was surprised at the cut to higher education and vocational training. I was surprised at that, just because we actually do need more spending in that area to help with the just transition for climate as well. Plus, we also know there are actually skill shortages coming through in the economy because the borders are closed.
Being a lot of expectation around a pink budget.
Yes.
How much was done for women's security, that sort of thing?
I think there are nice headlines, but I think underlying, I didn't really see a change in how the government's actually thinking about the budgets. I still see that a lot of men, it feels like a lot of men have been involved with the budget, and there's not a lot of female thinking in it.
All right, Ming Long, thank you very much for your take. Good to talk.
Thanks, Tikki.